All right. So, welcome everybody. This is speaker number 2 of 10 of Stride's speaker series on leading through adversity. And today I'm very excited to have Charlie O'Donnell from Brooklyn Bridge Ventures with us today. And Charlie's going to be talking about failure is always an option. And I will quickly retell the story I told to you guys that joined earlier today, is that I actually met with Charlie back in 2014. And thanks to a very insightful, very short 30-minute meeting that we had together, he helped me pivot Stride Consulting from what it was initially to what it is today. And I'm forever grateful for his course correction. And you helped me pivot, and I thank you for it. And Stride is exceeded my wildest dreams, and it's a company that I love so much. I can't even believe I'm part of it. And that was part to your advice about thinking about failure. So I'm personally really excited to hear what you have to say today amongst all the crazy. So with that, I'll let you take it away, except for one more thing. For those of you who have questions, keep yourselves on mute, good Zoom etiquette and all. And if you have a question, you can either unmute yourselves, you can do a hand raise like Charlie just did, or if you click on the participants icon at the bottom of your screen, you can then click the green yes circle, and then we can call on you. Also, at the end of this, I'm going to be sharing Charlie's contact information, so you can always find him after. And also you can find him at Brooklyn Bridge Ventures, which is the venture firm that he runs. So Charlie, I will put it in your hands.
Sure. First of all, thanks for having me. I really appreciate it, and happy to be reconnected since that first meeting. So one of the things I've noticed, I've been in venture for quite a while, almost half my life now, which is kind of crazy to think about. But there's a narrative around venture capital and entrepreneurship that I think is kind of a headline narrative of founders succeeding against enormous amounts of adversity and against all odds, and persistent founders having pushing it into the red, having the empty bank account or running up debt, or just, the never say die attitude and approach. And yes, there are absolutely many, many examples of that, where all was lost until that one lucky moment or that one investor who happened to say yes. But what's missing from that narrative is all of the examples where founders pushed it into the red and there was no upside after that, right? They made enormous sacrifices for an idea that ultimately did not pay off for them. And, some of those can be extremely costly. Some of those stories can be extremely tragic. And I don't think that gets shared enough. And because of that, I don't think we've normalized failure. In fact, even when companies and investments ultimately fail, we gloss over them. We write these stories about how, Google acquired my company, which is more to say that Google paid me and my technical co-founder a couple of bucks to join Google as an acqui-hire and allow me the grace of announcing an acquisition, but the reality is all the investors lost their money, right? So we can't even say that we actually failed. We have to, gift wrap it in an acqui-hire. And so I think we've created this culture where we don't acknowledge what real failure actually looks like. And because we don't acknowledge it and we avoid it, it creates a lot of uncertainty around it. And I think uncertainty is where fear comes from, right? when we know that something is going to happen and it's something we don't like, we don't really fear it so much, right? Like if you knew ultimately that you were going to have to wind up a company, right? The moment where you say, hey, we're done with this, there's almost this sense of relief because there isn't uncertainty anymore. You know you're done with something, right? It's the dread that leads up to it. What are my investors going to say? What are my employees going to say? It could be the same in a relationship, right? Where you almost worry more about what how your significant other might react if you say you're not happy, then you fear the end of the relationship, right? You're not happy. You're actually looking forward to the end of the relationship. You just don't want to get into that conversation because you're afraid of hurting them. You're afraid of the conversation being difficult. You don't know how it's going to be. And so I encourage founders to really think about and think through what various aspects of failure would be like to eliminate the extra fear that comes from that stress. And it's something I do in my own life. I got asked by another venture capitalist who, was, had sort of laid their reputation out on the line, both externally and internally within their firm, put a lot of money into a couple of companies. Obviously, not all of them are doing well, and just felt a lot of pressure to do well, to be successful. Here's the difficult thing from a venture capital perspective. People always assume that if you're in venture capital, you are successful, right? Like if I've invested in a company that you've heard of, it's very easy to get invited on a panel or at a conference and to constantly be told, oh, we're very lucky to have successful investor Charlie O'Donnell here. And I constantly hear it. Well, look, the reality is I have not gotten a carry check yet from my investment, right? VCs make a cut of the profits they return to their investors. And, I am not at the point where my investors have all their money back yet. So that's my bar for success. So, I suppose I have successfully gotten into venture capital, but I don't think it would be accurate quite yet to say that like I am a successful VC. I'm optimistic about what the end outcome will be, but it's a little premature to call the body of work at my firm successful so far. But it's very easy to get that success tied up in your identity and your sense of self. This happens both to VCs, it happens to entrepreneurs too, where you're an entrepreneur, you raise a round, you launch a product, and same thing, you get invited to these panels and hey, we have a panel of successful founders, right? And you feel this imposter syndrome because you know everything that's completely broken at your company. And meanwhile, everybody who hasn't yet raised a venture capital round is looking up to you as if you're in the promised land and you're wondering how this thing is going to stay together, right? And you don't need added stress at that point. And I think, so this VC said, hey, you seem pretty even keeled. Like, how do you maintain it? And I said, well, I acknowledge the fact that I might not be good at this, right? And it is not to say that I don't try really hard, right? It is not to say that I am not thoughtful about the kind of investments that I make or that I don't put a lot of work into trying to find that next best investment. I certainly try to be really helpful to the companies. I try and help them be successful. But at the end of the day, the possibility exists that these investments will not be successful. And that, there will come a time in which objectively one could say, I was not a good investor, right? Now I could continue to deny reality and say, well, that was just a spat of bad luck. Who knew there was a pandemic that was going to come, and all of this sort of stuff, right? But there is, I think we should hold some amount of objective truth into what is success and what isn't, and what goals are we trying to reach, and what happens when we miss them. And so I think about that sometimes, and I say, okay, well, if I am deemed by the market not to be successful, what would happen? Well, I would have to change jobs, right? I might not be able to raise a fourth venture capital fund if the first three funds don't ultimately turn successful. And I will have to go into another industry. There's other areas of interest that I like. I feel like I have enough of background and insight that I would get, that I'm hireable for those areas, and I would, go in and do that. That would be okay, right? As my downside, that's not a terrible downside, right? Would there be some element of embarrassment that I might, experience? Maybe. That is a possibility, right? That one day I might have to write a blog post that says, hey, I'm no longer in the venture game. Brooklyn Bridge Ventures doesn't exist anymore. Don't pitch us, and we're not raising a new fund, blah, blah, blah. That is a possibility, but that's one of the things I'd have to do. Like, I sort of mentally walk through that and be like, well, that's what people do in venture. If you're not raising any new funds, I might have to write a blog post and tell everybody, right? And I really don't think everybody's super busy. It's like the vast majority of people probably wouldn't care. Even the VCs that the entrepreneurs that I turned down, there might be a little, schadenfreude of them saying, well, that guy didn't think that I was going to be successful. It turned out he wasn't successful either. But, I might hear a little bit of that. But, I could take that. I have a thick enough skin. But it's not something I fear, because I've thought about it, right? I've played it out in my mind, and I just did it once. Right? Like, I don't have to think about it again, because it's a fully sort of thought out and vetted, like, okay, if this doesn't work out, I kind of have a vague plan for that, and I'll deal with it, and it's not terribly bad, and I can put it away. It is no longer taking up that, kind of mental bandwidth. I had the same conversation recently with somebody I know who's, about 15 to 20 years older than I am, and worried about job stability, worried about being out in the market as a, somebody in their late 50s who wasn't financially ready to retire, doesn't love their job prospects out on the market, being in their late 50s. And their company has had a few layoffs that they've gotten through, but so far made it through unscathed. And I walked him through, and I went through the same exercise. And I said, what is your downside, right? Like, what would actually happen? And, it turns out they have an elderly parent in a house that's probably like way too big for them. And I said, well, you might have to move in with that parent. And you know what? That's what people from my parents' generation did when they were younger in the Depression era years. They had multiple families moving in together, sharing expenses. And I said, you know what? I said, yeah, that must have been hard, having, 3 kids in a bedroom that, most kids today would think is small just for one. But at the same time, that era, that generation of people has incredibly intense and close-knit family connections, right? Born out of that difficulty comes really, really good relationships. So, hey, if you had to do that, I'm sure your family would appreciate being, in the same geographic location as you. I'm sure they would appreciate the FaceTime. And yeah, so given that situation, you could probably guarantee that you're not going to be homeless. And if that is that's your downside. And he said, he's like, wow, I'd never really thought about it like that. That's not a horrible outcome, right? I mean, it's a lot of upheaval. It would be difficult, but it's not that bad. And I think in that sense, when we think about those scenarios, it gives us permission to not think about them anymore. There's no more consideration that's needed for that, because you realize it's not something to fear. Now, you do everything you can to avoid that situation. It's not what you want, right? But I think fear can be paralyzing. I think it can cause us to make bad decisions because we're afraid of taking those risks. And especially for entrepreneurs, a lot of times the only way you succeed after losing a customer or not raising the investment round you thought is growing your way out of a problem, right? And how do you grow your way out of a problem? Well, you probably have to make an investment in marketing or sales. You almost have to accelerate towards the edge of the cliff to make that jump, right? If you don't hit the edge of that ramp fast enough, you're not going to be able to sort of cross that canyon, and it is a scary thing. But you don't want that fear to necessarily paralyze your decision making. I think particularly in this area of very public and personal leadership over companies, this very filtered, Instagram version of everything sort of glossed over and seeming like, everybody's life is perfect and all of that sort of stuff. And you want to be afraid of, like, I don't want to be the only founder whose company is, not working out that well. And what would happen if this sort of didn't work out? And you want to make sure that it doesn't impact your identity and your sense of self, right? Because I've acknowledged that it is possible that maybe I'm not good at this. I'd like to think I am, but it's possible that I'm not. My identity is not tied up in being Charlie O'Donnell, the successful VC. Like, I'm just Charlie, right? There are other values that I have. There are things I hold important. I am Charlie O'Donnell, the VC who works hard for their portfolio and for their investors and for their founders. And if I ever failed to work hard on behalf of my investors or behalf of the founders, then that would mess with my sense of self. Then I would say, hey, why didn't I work hard? Yeah, that's a problem. Like, I somehow, mailed that in, and I really don't want to be that person, right? But if it turns out I had an investment that was a failure, if you only think of yourself as a successful person and something goes wrong, now you're messing with your core sense of self and who you are as a person. But wait a second. What do you mean I'm experienced failure? I'm successful. I've told myself I'm successful. I've told everyone else I'm successful. I had to tell investors that I'm a successful person for them to be willing to give me money. And now how do I explain to them that it turns out I couldn't do this, right? I think that's one of the most problematic aspects of this. Is that, it's part of our identity to be tied up in this success. And, I think when you say, hey, my identity is such that, it's who I am as a person is just me, right? Is the person who works hard, is the person, it's like, reward the effort, not the outcome. And I think people have to do that with themselves too. And I just find that to be incredibly important, because there does come a point, especially in risk-taking activities, where there's some things that are just out of your hands, right? I'm invested in a company in the travel space. The founders have worked incredibly hard and made incredible strides and actually had a very, very good January and February of this year, right? A global pandemic was not on anybody's radar, right? The idea that everybody across the entire world would suddenly stop traveling for months, you know, it's not their fault. Now, there's a lot of aspects of the way they built their company that they're still well-funded, they're well-positioned. We're optimistic about when the world kind of comes back, how well-positioned they are. But, you know, it is possible that this investment doesn't work out purely because of outside factors. And I think at the end of that, they should be able to hold their heads high and not feel like there's something they could have done, because this is the kind of thing that is sort of out of their control. And I think that's, you know, it's an important thing to consider, because at the end of the day too, and I'll make this last point, we have longer careers than just this one thing that we are doing right now, right? And, you know, the average person changes jobs, you know, 11 times over the course of their lifetime. And how you act with your investors, with your clients, with your employees, is really impactful on your ability to bounce back from this, right? I remember I had started a company that didn't work out, and I had 21 individual angel investors, and there's lots of things that in hindsight we could have done better, but it was not for lack of working hard. And I emailed all the investors, and it took me a day to write that one, like, dear investor, we are now a tax write-off. And I crafted that language. I literally spent an entire work day, just every word. How do I write this word correctly so it doesn't feel like I'm not taking it seriously, and I don't want to be thought of as giving up, and all of this sort of stuff. And the first two emails I got back was one that was like, hey, you guys worked hard. Thanks for keeping us in the loop the whole way. Let us know if you ever try and do something else. We'd be happy to back you again. Which was just mind-blowing to get a response back within minutes of somebody who I just lost $25,000, right? But because of the way we acted in the company, they thought, like, you've shown me that you're worth taking a risk on. Now, that doesn't mean that, you know, like, it didn't turn out the case in this situation, but maybe the next one you would have learned more. And the other one was, you know, you also forget the context of, like, while your activities are the most important thing in the world to you, everybody else has plenty of other things going on, right? And the world won't necessarily stop to take notice of your failure and focus on it the way you will, right? So this other investor responded, and he goes, well, hey, I actually also just got noticed today that another investment that I made is going to return me 50x. So between the two of you, I'm up 25x for the entire day. So today was a good day. And I was like, oh, that's right. This guy is an angel investor with a portfolio. He had no expectation that all of the companies are going to work out. And I was part of his good day. I was the bad half of his good day, but in general, like, this was a pretty good day for him. And so, you know, it's important to take that into consideration as well, that, you know, not everybody's gonna stop and point and gawk, and they got other stuff going on, and you know, will recognize that you'll largely benefit from that experience as well. So, you know, it's one of the things that I try and remind founders. Keep the downside in mind, obviously trying to do what you can to avoid it, but don't let the fear paralyze you, because ultimately, like, this is a risk-taking endeavor. You know, everything, you know, stepping out of your door. And in today's world, more ways than one is a risk-taking endeavor, but you can't eliminate all the risks, but you can prevent the risks from paralyzing your decision-making. And I think that's incredibly important.
Yeah, I think I mean, everything you're saying is resonating with me. And I think one thing that for me personally, so I've started a handful of companies. Most of them have crashed and burned gloriously. And so don't let the startup impact your identity and who you are. Only after a couple of not after the first one, but after like 3 failures did I realize that. I don't know if I could have done that. Like even hearing you say it, I don't know that I could have done that the first time out, because I had that like unwavering faith that of course I was going to pour everything into it and it was going to be, you know, the greatest thing ever. And of course it wasn't the first few times, but I had to learn that the hard way. How can you learn that? How do you, is there anything you could tell first time entrepreneurs or someone that this is their first really go at it? And, you know, how do you kind of hedge for that, even planning for the downside? Or is that the way to do it? Or is there anything else you can say on that?
Yeah, well, I think there's a couple of things around that. One is, you know, it's funny. I recently got a pitch from a founder that I didn't feel had done all of the work necessary to prove to themselves that this was actually going to be a great outcome. Like they had this idea in their head that that this was a great idea. But I think one of the other aspects of acknowledging that something might not be is requiring proof, right? That because I think it's important to sort of also value your time and to say, hey, I have something to contribute, right? And if this thing that I'm working on now ultimately has no upside, I should be working on something else, right? It is not to anyone's best interest, particularly my own and what I have to offer, for me to continue working on this, because I know I have value and I should be working on valuable stuff, right? And so one of the types of founders that I appreciate the most is one who values their time and contribution and holds that bar up to say, I'm only going to work on this if I can prove to myself that if I execute well, it can work. And especially when you like find out new information, I find that particularly first-time founders are very resistant to new information, right? They think that there's an idea for something, and it turns out that the more they do some customer research, that ultimately it's not as big of a problem as they thought, or people just don't have budget for something or whatever. And they stay committed in the face of plan changing negative information, right? And
Yeah.
And I just don't think they like recalculate those inputs into the model to say, oh wait, like that's how you think about pricing? Oh, at $10 a month, like we're not going to be able to make this work. Like this model only worked if people were paying us $100 a month. But if that's the way you think about it, this model needs a serious change. And if I can't make $100 a month from you, then there's just no business here. And that's fine and that's okay. But like doubling down on that, like it's the sunk cost thing, right? It's like, if you wouldn't have started a business knowing that the customers only pay $10 a month, then the day you find out that they only pay 10, then maybe you should just pick up your marbles and go home, as if that's what you do from the beginning.
Right. Yeah, no, that's very good advice. We do have a question from someone that is listening, so we're going to unmute them and hopefully it will work smoothly. And then if anyone else has questions, you can put in the participants and Michael from Shy can unmute you. But Michael, you want to go ahead and unmute James if you can?
Oh, thank you. This is a really great topic. I was wondering if you have any specific strategies or specific steps that you go through in the analysis of considering failure as an option. You know, I know you've given us a lot of reassurance that that is possible and how to get through it, maybe at the beginning or on the other side of it. But when you're in the middle of it, you know, your vision can be a little bit skewed. So maybe some things to keep in mind when you're in the middle of that.
Yeah, sure. So, you know, look, I think there are a couple of things, and some of them are more on the company side and the sort of corporate financial planning side, and some of them are on the personal side. So, for example, when I had started a business, I was figuring out my own personal finances, and I was setting my salary in such a way that I was dipping into my savings to sort of pay my overhead. Now, there's levels of existence, right? I had decided I am not selling my apartment and I wasn't selling my car. And so like, those are things that like, before I even went into this endeavor, I just said like, this is my level of existence that I am not going below, right? Because I have a certain sort of, you know, happiness threshold that like I need certain things, right? And so I have these finite amounts of resources that I am willing to contribute to this thing. And so the moment at which I need to dip below that, or that my plan requires dipping below that, like that's my line. And I think that's another thing that like, one of the ways that you can eliminate that uncertainty is by thinking about that ahead of time. Like before I go into the business, say, okay, well, you know, I have this 401k, which I'm not going to touch, or this other thing I'm not going to touch, but this, you know, little bundle of savings over here, like if I need to go into that, you know, I have X, Y, and Z criteria for going into that. Like if I close a customer and if I have high confidence that I can close another one, I'll dip into that money. But if I don't have any customers closed, I'm not touching that, right? Like I am treating that little bundle of money as if I am a VC who only invests in revenue generating businesses. And if I don't generate revenue before I need to dip into that, maybe I'm not doing that, right? So there's some personal levels that I think before you go into it, or even now, it's sort of like the best time to plant a tree is 20 years ago. The second best time is now. Like, set that now, right? Figure out what those limitations are now before you go into stuff. You know, on the corporate level, you know, for example, in the world of venture capital, we always think about these rounds of fundraising, right? The fact that we have a financial plan and we are aiming to get to a point where we're either going to hit profitability or be able to finance from someone. And one of the areas that sort of is this signal of maybe we should stop doing what we're doing is when you have not run out of money yet, but it's pretty clear that where you get to on your current money is just simply not enough for anybody to continue investing in the business, right? So you've got 4 months left of capital to go, and it's pretty clear that unless something major changes, you're just going to burn this money, right? That like you could keep going the way you're going, but there's no positive outcome at the end of the rainbow. And I think that's why financial planning exercises and goal planning exercises are really important to go back to and to reevaluate, to say, if I stay on this current track, I wind up here, right? I decided I was taking a 6-month sabbatical to figure out a new business, and at the pace of investing or at the pace of this, I won't have the required amount of clients to go full time on this by the time my 6 months is done. So something needs to change. I think a lot of times planning and modeling shows that you won't hit the goal that you will need to. And that's where, at least I personally, was sort of a financial kind of approach to stuff. That's where I tend to use some of those signals. But it's not all about money. Sometimes it's just about like um, you know, happiness, right? And you know, we could all decide to just sell all our material possessions and you know, sink it all into this business idea. But I don't know about you, I would not be happy living in a barrel in the street. Like that's not where I am. I need some stuff. I need a roof over my head.
Yeah, I love that. I think for me, I've always tried to make decisions as far in advance as possible because, again, it's about knowing yourself. Like for me, I know that I sometimes make emotional decisions, right? And so as an entrepreneur, what you said for me is about a very simple fact. Am I making it based on data or am I making it based on emotions? And the closer I get to the thing, the more emotional I'm going to be. So like I just want to separate. And so when I get there and I said, 3 months ago, I said, if I was here, I would do A, B, and C. And here I am, right? Like I might be 1% off, but it's, like, let's be honest, this is where I said, and I'm here. And that's
thinking of this stuff as a test too, right? Like I see a lot of people, for example, who are in love with the idea of being on a founding startup team, right? Or being an early startup employee. And so they go out in the market and there's a reality of how much money they need to make. And they just can't find an opportunity that also pays their mortgage and their kids' college tuition or whatever they're doing, right? And I think it would be difficult if you were like, if I don't find a startup to work at, that's a failure. Versus looking at it like, I'm gonna test the market. And I think I may be happy at an early stage startup. But one of the things that makes me happy is being able to pay for my kids' school and being able to pay for my mortgage. So I went out on the market, I tested to see if this set of opportunities would make me happy. And ultimately, I had a successful test in that the test gave me a set of answers that said I would not be happy at a super early stage startup that had funding. So in a way, it's successful in providing information. You know, maybe that didn't result in a job, but at least gave you the information to say, no, you can't be happy doing that because you would need to forego those things.
right. I mean, that's the, fail fast, tenet that many of us are familiar with. On that note, one time, 6 years ago, I was convinced that I actually didn't want to be an entrepreneur anymore after doing it for 15 years. And I did one of them tests and I actually got a job and I held the job for 3 days. Not my proudest moment, but I was like, yeah, no, no, apparently I want to be an entrepreneur. And that was fascinating to me. I was so sure that I wanted to be an employee and very clearly did not. Not that I'm advocating that's the way everybody did it. I did that. I was like, here I am. Why does this feel so wrong? And it was a very quick test. So it was very interesting.
I want to acknowledge too that saying no can be incredibly difficult and stressful, especially if you're sort of starting out. Consultants go through this all the time. One of the most important things you can do as a successful consultant is to say no to underpaid projects, right? Because they take up your time, and time is your precious resource that you're trying to sell, right? So you start out and you have no clients, and then somebody comes along and they're like, hey, I want to pay you. And you're like, oh my God, I'm really excited for this first, paid engagement. But if it takes up 3/4 of your time and doesn't ultimately pay the bills, it could squeeze out the time that you would have otherwise used for finding more lucrative clients, right? And so it's hard, but sometimes you have to say no. And when you have no other option, right? To go back to the relationship thing, right? Choosing to be on your own is difficult, right? It's very understandable why people stay in mediocre relationships, because the alternative is choosing to be alone, right? And so people are like, well, this isn't great, but hey, at least it's, another person being around, right? And it's quarantine, and I just, need somebody around, right? But it ultimately could be, weighing down your opportunity to spend your time differently and more wisely. But I do want to acknowledge that it's not the easiest thing in the world.
Yeah, absolutely. So with that, I know we've doing a really good job of kind of listening to your kind of best practices and throwing in a couple questions for you, and I appreciate you answering them. And I want to just throw out to the group that's here today. We've got a couple questions from me and from James. Are there anyone else that wants to ask a question at this point? So
if you're thinking of a question, somebody else is thinking the same thing.
Right, exactly. All right, I have actually one more question, and then if anyone else has it, they could shout out and raise your hand, and Michael can unmute us, and then I can put up the contact information. But this is I'm thinking out loud here, but is it wise, unwise, or irrelevant to start a new company during a shrinking economy?
Well, it depends on the company, right? I mean, there are plenty of bad ideas at any point in the economic cycle that are probably not worth pursuing.
Yeah.
So I don't necessarily think the economy, because what's interesting is like an individual founder experiences a set of a much smaller instance than the economy. So, and what I mean by that is like, yes, the economy is very difficult right now, and like 1 in 4 people is potentially out of work, right? But that still means that 3 out of 4 people, I mean, let's say it's a consumer product, may be in need of what you have to offer, right? And you are just trying to find one. You are trying to find one at a time, right? So as long as there are enough customers to go to and enough people to ask, in a difficult environment, sure, there may be less, but there are still multiple. I always think about that in cyclical businesses where the whole market sort of bounces up and down, but like even at the bottom of the cycle, it's like here's the bottom of the cycle, here's how many customers you have, right? So like you don't even it's like, do the fish at the bottom of the ocean floor know that waves exist? Like it's just all water to them. They're just on the bottom, right?
Above your head, yeah.
Yeah, it's all happening kind of up here. You're just trying to get that next customer, that next gulp of water, right? And so I think like that's, for small founders, that's the case. Now, on the other side, I think it's important to think about how this environment impacts all your customers, right? And so does it change their decision-making habit? Does it change, for example, I just offered a term sheet to a company in the life insurance space. Now, I don't know about you, but like, I have had a conversation with my wife about life insurance, and we're healthy and feel very lucky. But this environment has actually made us think about like, yeah, we should probably have enough life insurance to cover the cost of the apartment that we now live in that we purchased a year ago. Like, just in case, because, if you're in the just in case industry, your customers are now thinking about all the possibilities. Whereas previously it might've been very difficult to get anybody to think about life insurance. Now everybody's thinking about life insurance, right? So I think you have to acknowledge that this economy impacts everybody, but at the same time, you're still looking for that customer number one.
All right, so I appreciate that, and the reason why I'm hesitant is because I think I'm just gonna read this for the sake of time. So someone had sent to everyone, you can probably read it as well in the chat. and I don't know if I'll read this, and Michael, if you want to unmute the person as well while I'm reading it, we could do that. So first-time founders are resistant to new information. It's scary. I suppose the other end of the spectrum would be chasing every little thing. What's the best way to strike the right balance? You mentioned the financial planning exercise. Is having a flexible model and revisiting it every month to see if it makes sense, or having a new person understand and challenge it on a periodic basis? Does that make sense?
Yeah, yeah. No, I mean, I don't know if there's a perfect, concise answer to this, right? You know, I think you start off every model with a certain amount of assumptions, and look, there's separate, like, models should be sort of driven off of 2 pages, right? One is a page full of assumptions, and another is sort of the month to month. And so when somebody works out a model, you should say, okay, my assumption for the performance of an individual salesperson, let's say, is that they can reach out to this many people, close this many people, and close at this price point, right? Now, there's a difference between a fundamental missed assumption and a good and bad salesperson, right? So sometimes you hire somebody and you know, they are only able to make 20 calls a day. And you have to look at that and say, is it just physically impossible to make this many calls that I'm assuming? Or is it that I just didn't have the right person doing this? And I think that's why it's important to have peer groups of people that you can kind of check things with, to say, hey, I have 3 entrepreneurs who also run sales-driven businesses who have a very similar sales cycle than I do. How many calls is your team making? How many calls is your team making? Oh, okay, you know, 20 a day. Yeah, that does seem pretty reasonable. Okay, I guess the person I just hired who's only making 10 is just performing below market, and I shouldn't change my model because everybody else seems to think that it's totally reasonable. And that's why I think first-person research is really important. You know, I have this assumption, but can I check it with somebody who's actually doing this thing to see if that is possible? You know, and I think the reevaluation is also the ability to look at timelines, right? This month, you may have missed your month target, but if those leads are still in the pipeline and you expect them to close just after the month, then like maybe next month you'll be over, and there's month-to-month variability. But there does come a point in which you're behind every month. We said we were going to go break even at the end of the year, but like at this rate, we're just not going to go break even. And so it's pretty clear that something like needs to change. Yeah, I think this is why it's useful to have boards and advisors. Even if it's not sort of an official board, when you sort of think about checking in with somebody on a regular basis, and I think a lot of people, to their detriment, don't have people to check in with unless they take on investment. And I think that's bad. I think it is helpful to have people to be accountable to, besides yourself, for you to say, hey, this is what I'm going to try and hit. And it's just another bar. It's very easy to convince yourself, you know, hey, I said I was going to get 15 customers, but you know, I could have had 15 if it wasn't for this thing that was like totally out of my control. You could tell yourself anything. It's much harder to tell somebody else with a straight face, yeah, after the 3rd consecutive quarter of missing my goals, something is off here. And I think the accountability of another person, even if it's just another founder who you both check in with each other and you have this informal sort of buddy system relationship, I think that could be useful too.
Yeah, absolutely. Okay, so I appreciate that. And so what I want to do, I'm looking at the clock. We're right about a little shy of you know, the 2 o'clock mark here. So I want to wrap up. And so I want to say thank you. Then I'm going to share my screen because I'm still working out my technical abilities here. But I really appreciate the time and I really appreciate the insights. This has been absolutely wonderful. I've learned a lot, and I think we've got some really good questions here. And so with that, I'm just going to bring up and excuse my screen. Here we go. There we are. So I want to just kind of put up for everybody. So Stride Consulting, which is a company who is bringing this speaker series to you. We can be reached at our website, or my email is debbie@stridenyc.com. And Charlie can be reached. I put your website up there, brooklynbridge.vc. Has a lot of really good information on how to get in touch with Charlie. And if you want to pitch an idea or ask any questions. And then next, this is a really important topic. So June, I apologize, a little noise in the background, of course, better timing couldn't be had here. But Dr. Kerry Sulkowitz is a psychiatrist, and he's going to be talking on the pandemic of anxiety on June 4th at 1 o'clock. I don't know if anyone's like me, but the anxiety levels during work, family related, it just kind of like at an all-time high for many people that I speak to with. And I think this is a topic that we are not talking about enough, because our current state of all-day Zooms and parenting and working and not seeing people in person, this is going to be, this way for some time now. So really looking forward to this next week. If anyone has any questions, let me know. I'm going to share this recording out to everyone afterwards. And thank you again, Charlie, for your time. It's been amazing. And with that, I will say have a good day, and we will see everybody soon.
All right. Thanks a lot. Nice talking to you.
You too. Take care.